A new Bitcoin giant just launched, backed by SoftBank, Tether, and Cantor Fitzgerald, with Jack Mallers at the helm and 42,000 Bitcoin to start. Is this multi-billion-dollar Bitcoin acquisition vehicle just aimed at challenging MicroStrategy? Or does it signal something bigger, a stealth convergence of sovereign capital, offshore dollars, and Wall Street power? Could this be an acceleration of an all-out speculative attack on the US dollar system itself? Huge news broke yesterday as new Bitcoin acquisition company 21 was launched with Strike's Jack Mallers as CEO and spokesperson. The company joins international financial heavyweights such as Cantor Fitzgerald, SoftBank, and Tether into a pure capital markets play, designed to become the most aggressive publicly traded Bitcoin holding vehicle on Earth. Now, there's a lot to be said about the financial heavyweights that are backing this company and what could be happening behind the scenes, but more on that a bit later. First, some details on the announcement itself. Initially seeded with 42,000 Bitcoin, 21 has a single mission: accumulate and hold Bitcoin at scale with precision. And they are taking aim directly at behemoth and first mover MicroStrategy, which was recently rebranded to Strategy. In the announcement deck itself, there's even a slide specifically taking aim at MicroStrategy that makes some bold claims, positioning the company as a, quote, potentially superior vehicle for investors seeking capital-efficient Bitcoin exposure. Mallers was on Bloomberg TV to talk about the announcement.
We've been so inspired by Michael Saylor and all of the public companies acquiring Bitcoin, but I would say over the last few years, that inspiration turned into what we thought was an opportunity and a hole in the market that we could deliver on, which is bringing blue chip credibility and startup upside. We feel like we can bring enough capital and be big enough to win. We're small enough to grow, and most importantly, a pure Bitcoin business. A lot of these companies, they're pivoting from a past operating business. They're rebranding, changing their name. They're maybe selling video games to buy Bitcoin or selling medical equipment to buy Bitcoin. Right. And we're a purpose-built Bitcoin company. We're going to build Bitcoin products, Bitcoin cash flow, and we're going to give Bitcoin per share growth to shareholders and be hopefully the best way for investors to get Bitcoin exposure in the public markets.
So as Jack lays out, this isn't intended to just be MSTR 2.0. This is an attempt at building something faster, leaner, and more native to the Bitcoin operating system. Just like MicroStrategy, 21 plans to issue debt and equity to accumulate Bitcoin. But with lower operating costs, Bitcoin native leadership, and zero corporate baggage, they claim it can move faster and cheaper. So is this a threat to strategy? Potentially. 21 claims MSTR's scale limits its yield potential, that it's weighed down by legacy business models, that it's too slow to respond in a fast-moving Bitcoin environment. But MicroStrategy also enjoys lower borrowing costs, stronger media gravity, and deep institutional credibility. It also has a 5-year head start and a massive Bitcoin balance sheet that will be a monumental task to catch up to. As of recording this video, Strategy holds a staggering 538,000 Bitcoin. And in a recent webinar with The Block, Saylor showed no signs of stopping his company's relentless Bitcoin vacuum.
Is there a ceiling that MicroStrategy has in mind in terms of how much Bitcoin it can hold? Or is it kind of unlimited and really depends on what is happening in the market?
No, we'll just keep buying, right? The price is going to go up. It's going to get exponentially harder, and the price is going to go up exponentially higher, and we'll just keep buying. And at some point, if we get to 5% of the supply, Bitcoin's probably going to be $1 million a coin. And if we get to 7.5% of the supply, Bitcoin will be 10 million a coin. And then if I'm lucky enough to grind to 10% of the supply, Bitcoin's going to be 50 million a coin, and someone will be whining that whatever, we have too much Bitcoin, but other people will have $400 trillion of wealth, So our view is it's a ratchet, and we're just going to keep cranking on the ratchet, and there's massive leverage here. And I think everybody's winning if we do that.
That's right, Michael. Everyone is winning. In the middle of this collision of heavyweights is one asset, and that's Bitcoin. And you better believe us Bitcoiners will be watching with the popcorn in hand, ready to see how this battle plays out. Now, I want to highlight one more short clip from Mallers on Bloomberg yesterday.
We want our shareholders to get wealthier, get richer in Bitcoin terms, and our metrics encourage the market to view us not in fiat terms, in Bitcoin terms, because we're not here to necessarily beat the market. We're here to build a new one and encourage the world to adopt Bitcoin in a sense that we believe it hasn't yet.
So Jack makes it clear the intentions of 21 are in line with the ethos of Bitcoin. Bitcoin was never intended to simply cozy up to the traditional financial system and become just another asset. It was designed to replace the fiat banking system completely. And this announcement has OG Bitcoiners like Max Kaiser calling this an intensification of a speculative attack on the dollar system. Max posted this on X shortly after the 21 announcement. Speculative attack intensifies. Saylor started something in 2020. Don't cry over low rates and inflation. Borrow cheap and buy the hardest money ever known. The tsunami of copycats have arrived, and the more Bitcoin bought, the less appealing fiat money, particularly the USD, looks. As Satoshi said, it's a self-fulfilling prophecy. Jeff Park, head of Alpha Strategies at Bitwise, also had an extremely interesting take on X. He says, Japan's lost decade birthed SoftBank. Dollar hegemony birthed Tether. Now these two misunderstood forces in global finance are aligning. Not just crypto, not just macro, a full system redesign, with Bitcoin at the core. The biggest story no one's talking about. You can read his full thesis right up on X, I'll leave a link in the description, but I'm going to attempt to summarize and expand upon it a bit here. Let's begin in Japan. Since the 90s, Japan has been stuck in an economic holding pattern. Interest rates were slashed to zero to reignite growth, but instead of lighting a fire at home, that policy sent capital fleeing abroad. What emerged was the carry trade, where cheap yen funded higher-yielding investments overseas. Japan became a quiet lender to the world, while its domestic economy drifted. Liquidity flowed outward and nothing flowed back in. From this imbalance came SoftBank, an avatar of Japan's desperation. Fueled by repressed capital and geopolitical urgency, it wasn't just chasing returns, it was seeking redemption. SoftBank became a vessel of state-aligned capital, deploying leveraged bets on global tech in a last-ditch effort to make Japan matter again. SoftBank's most ambitious moves were backed by state-aligned capital, Saudi Arabia's Public Investment Fund and Abu Dhabi's Mubadala. These weren't just investors, they were strategic partners. Now zoom out. While Japan was forced into financial exile, the United States tightened its grip on global finance. Through the dollar, the US imposed a quiet kind of control, monetary dominance backed by sanctions, swift access, and dollar liquidity. But the rest of the world took note. When the US froze Russia's central bank reserves in 2022, the illusion shattered. The dollar was no longer seen as just a neutral reserve. It was seen as a weapon. And that opened the door. Enter Tether, a digital workaround to US control. Like the euro-dollar markets of the 20th century, Tether operates in a parallel system, outside the US banking regime. It supplies digital dollars to the world, capturing demand without the friction of regulation. But it's not the threat itself. It's the infrastructure for a coming shift. Now add Cantor Fitzgerald to the equation, a Wall Street firm run by sitting US Secretary of Commerce Howard Lutnick. Cantor quietly builds bridges between traditional finance and emerging alternatives. When firms like SoftBank, Cantor, and Tether align, it signals something deeper. Capital, liquidity, and infrastructure are all preparing for an off-ramp. And what's the destination? Bitcoin. It's not just a store of value. It's the silent invader. Bitcoin is the protocol slipping through the cracks, Trojan Horsed into balance sheets across the globe, wrapped in equity, backed by pipes the US can't easily sanction, and increasingly used as a base layer for a post-dollar world. From Tokyo to Riyadh, Wall Street to crypto rails, institutions are slowly, sometimes unknowingly building on Bitcoin, not to hedge, but to escape. As global trust erodes and monetary censorship rises, the real race isn't between companies, it's between systems. The old one is enforced, the new one is emergent, and at the center is a silent operator, Bitcoin, positioned not as a protest, but as a systemic replacement. Now, this obviously won't happen overnight, but it is happening slowly and relentlessly. And as Satoshi said, it is becoming a self-fulfilling prophecy. So in a world where the monetary order is unraveling and Bitcoin is emerging as a strategic asset, BTC and DC provides a forum for open discussion about Bitcoin's role on the global financial stage and how public policy could help us shepherd in the Bitcoin era. Join influential figures like Michael Saylor and Adam Back September 30th to October 1st in Washington, D.C. to help shape the future of finance. Get your tickets today at btcanddc.com and be a part of the conversation that could redefine the global economic landscape. Swan is the general partner for BTC in DC, and we're excited to partner with George Washington University and BTC Prague. Our Swan private team will be helping host the event, and we're excited about seeing clients there, so don't miss it. And a quick shout out to Mara, the largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So what do you think? Is this a Trojan horse for freedom, or just the next corporate Bitcoin play? I'd love to hear your thoughts, so please leave them in the comments below. Like this video, share it with friends, subscribe to the channel, and don't forget to hit that notification bell so you don't miss the next video. Thanks for watching, and remember, TikTok next block.